Hi, this is Keith Schneider, CEO of MarketGauge.com, and this is January 27th, 2013 edition of Market Outlook. Please be sure to participate in our investor survey. We'll send you the results. We poll our users and followers and see what their sentiment is, and it's been yielding some very, very nice information. So it would be great to have more participants and include you in our survey, and we will send you those results. So, interesting week. Market continued 8 days up in a row for some of the key market indices, even despite the big Apple drop. So let's get into it right away. We'll cover our usual fare, get to some Apple charts, take a look at where we might find some level of support, and take a look at the bonds as well. Okay, well, first of all, let's take a look at the daily chart in the Dow Jones. As you can see, the Dow Jones chart, let's adjust this trend line a little bit on the closes using the close or the body of the candles. And you can see that we have now exceeded the upper end of this channel. So we've broken out to the upside. But one level of caution here is that on the daily relative strength index, we have now exceeded our overbought levels. So coming back into the channel would not be surprising. On the other hand, when this does occur, you can get really sharp accelerations to the upside. So again, we're going to want to watch the short-term charge in the market and see how that's setting up. But meanwhile, extremely bullish scenario overall, with the exception of the fact that we are certainly at overbought levels. So a little sideways action or even a correction here from a price standpoint, not unexpected. But again, you can't argue with the accelerating slope of the 50-day moving average, accelerating to the upside as well on the 200, but still lagging and catching up here. So overall, extremely strong pattern. Can't argue with this. Let's go to the weekly charts. Slightly different picture because we're extending the weekly charts to the tops that occurred in 2010. We're basically right at the top end of that channel. And again, the all-time highs are about 142 in the Dow. So it's still a good 2, 3, 4% away. And we are now hitting the upper end of this channel line. So again, cautionary level here. That doesn't mean that this market is over by any means, but certainly a short-term pullback would not be out of the question considering how rich we are running. Similar scenario, this is just playing out on the monthly chart, and we are at the upper end or even closed above this sort of pennant formation here, and again broke through it this week on a very strong close in the Dow. Taking a look at NASDAQ, completely different story, weighed down by Apple and in general. So you can see barely in gear, right? However, we are approaching a positive cross of the 50 over the 200. So it'll be interesting to see. We definitely need Apple to start stabilizing, and this is certainly an undervalued or underperforming index out of the bunch, weighed down by some tech here, led by Apple. And you can see, looking at this retracement levels, Fibonacci retracements, we're trading well within this particular range of the band, which is 38% to 23% from the range that was put in from the highs in September to the lows that were put in earlier in 2012. So I moved this accidentally, but you can see that the way this was working, the recent action in NASDAQ within the bands and all this sideways action. So it'll be interesting because you got a lot of power here. If you can get some stabilization in Apple and turn through this, you can definitely have a powerful move back up to the upside. On the other hand, definitely a kink in the armor would be a taking out of the recent lows that were put in the beginning of January of this year. That would definitely be a cautionary note and probably mean a bigger correction is underway in the other indices. Okay, let's take a look at spiders. Spiders still trading nicely up. We've sort of been in this since since just before the beginning of the year, betting on the fiscal cliff, and we've basically stayed with this, and it's moving up nicely. Again, very overbought. We're at a 99.9% RSI. So, you know, things can remain overbought for long periods of time. Generally, especially when you're trading in conjunction with the overall trend, and you can see 50-day moving average accelerating to the upside, well above the 200. Still not outside the Bollinger Band, so more room to potentially move there on a blow off top. But overall, the trend is in gear. News is good. The debt limit ceiling issue has been removed, so overall, extremely positive. And again, across the board on the monthlies and on the weekly charts, you are not quite overbought, but starting to approach. But overall, can't argue. Again, all the trends, all the moving averages, all these chart patterns still in gear. So, okay, now let's move to some of the other market internals. McClellan oscillator, I think I had mentioned this a couple of weeks ago. We hit that overbought level, worked its way off basically by going sideways. We look like we were a little bit rich here, not quite generating a sell signal, but again, at close enough to those levels. And we mentioned that markets can easily work its way sideways to up, even in an overbought situation. In this case, not quite overbought, and looking to see this thing really start to move to the upside and reaffirm its very, very bullish overall pattern here. So not much to infer here. We sort of worked off that little overbought level by going sideways to slightly up, and plenty more to the upside here. Now, that is the McClellan oscillator, which is more of an intermediate term, looking out over the next several weeks, because this averages 39 days worth of data. Now, on a shorter term basis, advanced declines, still in a healthy region. The market is definitely in a potential sell if we start basically turning under this 2000 point here. But meanwhile, as we mentioned, just because the market is at rich levels doesn't mean it can't continue. That's what's been occurring. And so until we actually turn down here and confirm a signal trading below 2000 for the advanced decline on the 10-day basis, we're still in a positive reading. Now, this, on up-down volume, interesting, even with the money flowing into the market, up-down volume remains muted. So again, this we like to see these indicators working together. We sort of got a little bit overbought on that initial first 2 weeks of thrust in the beginning of the year, and worked its way down beneath the overbought levels, generating what I would call a partial sell signal. But as we mentioned, things can go sideways, which it did for a while, and now it's still, the market's still accelerating to the upside. So not much you can infer overall from these market internals. Let's take a look at sentiment, take a look at the VIX. You can see we've scraping along, trading in very, very narrow compressed ranges because of the spike just before the end of the year based on the fiscal cliff negotiations and that brief sell-off. The Bollinger Bands expanded, but we are trading at pretty much, very, very low levels on a relative basis. In fact, let's take a look and go back even further on the weekly charts and see the last time we traded down to these levels. And we're going back to 2007. The last time you've been around these levels were around 2007. So, overall sentiment definitely indicating the bull market that we're in. And believe it or not, we're not exactly at frothy levels because of this expansion in the Bollinger Band. So trend still strongly intact on the sentiment, which is quite bullish. Interesting, the bonds that we've been talking about, the critical level, look what's happened. We now are flat on the weekly charts, right? The 65-week moving average basically flat. We've now closed under it 1, 2, 3, 4 weeks in a row. That's the most that we've been closing under that 65-week in several years. And more importantly, you can see how we had this critical horizontal support resistance line that now we're trading under as well. So price not nearly overbought or oversold, so there's plenty of movement possible either way based on the relative strength. Now looking at the daily charts, telling a much more interesting picture. We noted several weeks ago that we got the death cross. Look at that rapid drop in the 50-day moving average and that death cross there. We sort of broke down through this wedge pattern. If we break down further, take out the lows that were put into these TLTs at around let's see, critical level here is around 117.50 or so. Any close under 117.50 would definitely confirm that this whole top is playing out. So interest rates definitely on the move to the upside, and you can see this is playing out. So this is quite interesting because as rates are moving up, the market's moving up as well, and so it's possible the market is sensing a stronger overall, more robust economy. No need to lower rates, so we'll see how that plays out. But overall, the fact that the market is responding well to higher rates, in my analysis here, is a positive thing. If we look at the ratio of TLTs to SPY, you can see that this moving average here on a daily basis has been trending down, and the actual ratio has been trending down as well, indicating support for higher prices in the market relative to bonds. So SPYs, general market, certainly outperforming interest rates by a wide margin. Let's take a look at Google versus Apple on the spread charts. Again, you can see here we had talked about this for a couple of weeks. Bonds versus Apple, Goog versus Apple. Of course, this spread is now moving out. We mentioned it when it was about 1.4. It's now moved up to about 1.7. And Goog, just looking at the weekly chart on Google, you can see we're about to tack the all-time highs. This, whenever you go into uncharted territory, is certainly a positive. You never know where this can end up, but let's keep an eye on Google, because if we can take out the all-time highs, you can certainly have even a much bigger, more extended run as well. In terms of IYT, let's take a look at that. This is something that we had pointed out, and was one of our favorite sectors, transportation. We were definitely focused on transportation earlier in the year, at the tail end of last year, as we felt if we could get through this huge consolidation, which we did, we'd have a huge move off of this consolidation pattern which we've had. So overall, you're getting pretty rich here. We've started to peel off some of the position. We definitely recommended it somewhere in here. Again, you can see you have sort of a potential hammer top, huge volume, definitely pretty overbought on the relative strength indicator on transportation. So let's keep an eye on that. Wouldn't mind peeling off some profits and definitely tightening up your trailing stops if you're in this one. And last but not least, let's take a look at Apple. Okay, the key thing about Apple, clearly, believe it or not, we're only at 7 on the RSI. Not that bad on a daily chart, so there's some potential for some more down movement. Now, as you read the market commentary, clearly, you know, Apple is earning money at still an extraordinary rate for any corporation. It's been quite a feat, but market trades off of expectations. So this channel line here, the way we've drawn this in is I've used the bodies of the candle, not the wicks, but the bodies, to give us what I would consider the more interesting channel line that we're trading in. So you can see we've dropped through the bottom of the Bollinger Band after this earnings report. We should see some support and closing at least above this 420 level. Now again, what we're going to watch is for a key reversal pattern, because this is pretty extended. Remember, Apple is fighting the overall trend of the market, so you could get a pretty vicious snapback. Any announcement by Apple, they have a lot of flexibility if they want to show some concern for its shareholders. They are sitting with 140 or $137 billion worth of cash and accumulating more and more every day. So it gives them tremendous power to do all sorts of things. But meanwhile, obviously, you're in this down channel. The bottom of it here would also coincide with most likely a deeply oversold RSI, and that is somewhere around the 420 level or so on the daily charts. Let's take a look longer term on the weekly charts. You can see we still have a rising 65-week moving average. That's pretty impressive, although we've now closed down beneath it quite sharply. Believe it or not, from a moving average basis, the next level of support is somewhere around 350 to 370. So you're still talking a nice 10 or 15% drop to find support on a long-term moving average. And by the way, this actually worked relatively well. It sort of contained this drop, didn't really move much beyond it, and you can see it became an important swing point several times here. And same can be said for that 65-week moving average. That moved pretty nicely. It actually tagged it here, had a nice bounce of over $100, and ever since the last that last drop through that 500, it's also contained it on a closing basis. So you definitely want to heed this price level here, that 65-week moving average, most likely at 540 or so, is not going to be breached. But nonetheless, on the weekly charts, you can see we have longer term support coming in right around these levels here. Let me draw that in because this is an interesting point here. So this certainly, for longer term players who felt that they might have missed the boat, looking at this price level right here, right around 440 or so, is an interesting level. You can see that this basically was the level, or just around here. That looks like, excuse me, more like, okay, right around the 430 level was really interesting level of resistance. It was rejected 1, 2, 3, 4, and became a swing point before the market powered out and made its historic move to 700. So it returned move to the support level, looking at some support here, right around where we closed. Let's see how the market trades on an interim or short-term basis, and we can trade off of that. If you want to follow us, Mish's Market Minute, we definitely cover Apple and the leading stocks and sectors on a real-time basis, and I think that's how you need to respond. Old-fashioned tape reading is critical in something as dynamic and as it unfolds based on new information that comes into the marketplace. Thanks, have a great weekend, and see you next week. Thanks.